All right, let's jump into things. A bit of a weekend wrap, weekend review, so we can have a look at things, how things finished up at the end of the week, and sort of obviously sort of what's sort of coming up for this week. But even as I say that, sort of how things finished up for the week, I think is almost a moot point by now, anyway, given everything that's sort of happened just a few hours ago, basically. So it's where we are. It's 3:10 on the Sunday Arvo. So just bear with me one sec. Got to fix up these windows a little bit. These are a bit out of shape. That's a bit better. All right. So yeah, let's have a look at the sort of the data that we've got sort of coming up this week, and then obviously we can jump into the charts and that, and have a little bit of a think about potential sort of impacts that these latest sort of US bombing things going to have on the market, really, because yeah, it's funny with these things. It's sort of like you always see these memes come out, and it's sort of like I'm done being a tariff expert. Now I'm going to be a Middle East conflict expert and all this kind of stuff. And I don't claim it, and nor do I want to be an expert in any of these sort of things. And that how they impact the market is what matters to me. And really sort of like, what I mean, short of sort of the broader sort of strokes of it all, yeah, that's about as deep as I'm sort of going to get with these things. But anyway, we'll get to that in a moment. So come tomorrow, as I said, look, first, I say enough of that and then I go straight back into it. We're going to see some big gaps tomorrow. So we got big PMI Monday coming up here. As you can see, obviously through Asia, we've got Australia PMI. We can have a look at the data here. Again, it's almost a little bit moot, isn't it? Because look, we're seeing revision down, and then so again, PMIs look at the baseline of 50. Australia's actually poised not too bad compared to the rest of the world, and that well, yeah, rest of the world being these other ones that are sort of parts of Europe and UK and well, actually, US is looking a little bit stronger here as well. But this could have been the reason potentially that we saw Aussie holding for a little while. Like it's been grinding, but they've been buying dips, buying dips, buying dips. I've said it's looked very bearish in that, and there's a sort of saying with these things, obviously, sort of like being early is the same as being wrong. And in some regards, that is true. Yes, it all depends how you manage the trade. Because I was sort of like, I mean, I was long metals into the end of the year, and I got whacked on that. And then I was short gold as it ripped up through the 3,500. So definitely the timings were wrong on these sort of things with it all. But point being is with Aussie and that, I've been playing the short side, been trying to sort of hold a swing position in a new account, which has been incredibly infuriating. And particularly when you sort of sit back and you look at the sort of the returns you could do just with the basically what I call my style of trading, which is just in and out. Compared to these things, it's like, oh, geez, and it's sort of in profit, out of profit, in profit, out of profit. But now it looks like we may actually be rolling over, and obviously from the technicals coming into the end of the week, but then this bombing stuff on top of it. This is why I say that this data, to a certain degree, is a bit of a moot point because nobody cares how strong your PMIs are going to be in Australia if everybody in the world is going risk off. We're going to see US dollar sort of catch a bit on this, and even if you look at the data here as well, a lot of Europe and that is sort of like, they're floating around the 90s, these kind of things. Services tend to be a little bit stronger with a lot of these bits of data I've seen recently. But the US here is actually putting in prints above 50. So 50 is a baseline in that. And as you can see, I suppose there's a couple of spotted ones here and there, but pretty much we're seeing 40s over here. So of the two, obviously that's a bit of a sort of stronger print. Should these things come out as expected, they are looking to tip down for the US. But when you put them in comparison, and mainly the thing is against Europe because the euro, because of how much of DXY that makes up, we may actually start to see US dollar hold a bit of its bid. And I'll get to the charts obviously in a moment, but we had a big major breakout on US dollar, so we're going to have to see how this plays out. But expecting a gap down on Aussie on open, and I expect that probably to sort of continue because the US has sort of obviously bombed them. Iran will retaliate at some point, I do believe. Given the way that they're just a language that they use, and also just for their own sort of to try and in their own mind sort of save some sort of face. It won't do anything, I don't believe. But again, we're interested about how it impacts the markets. And I think as long as that stuff is still ticking on, Aussie is going to be the first thing to get smacked against this market. So that's kind of why I'm sort of like skipping over the PMIs here a little bit because I don't believe even if we do get a print above 50, the market's going to go, yeah, oh, great, but they're bombing back and forth and potentially on the verge of dragging more people in, having some sort of World War III sort of conflict. I don't think that'll happen, but that's the narrative. Um, Oh, but they've got some strong PMIs. I just don't think they care. You know what I mean? So I think Aussie's going to get a gap down, and I don't think these PMI numbers are really going to mean anything. It's interesting that they had 12 o'clock today as a time for Trump to speak. Was this already on the board? Was he already speaking here, or is this just because it's come out because of the bombing? Excuse me, because he did come out and talk earlier, but obviously it was about the bombing. But how would they have already had this marked in or planned in for this? I don't think they say what it's regarding to. Oh no, speak about there. I suppose that is what he's going to do, but anyway, regardless. Cool, so PMI's ticking through in that. US will be one to watch, particularly if it holds the bid through Asia and Europe. And if we start to see a couple of bits of US data that aren't too bad, that's going to add to the whole narrative and the story behind hold on, wait, maybe the US has got a reason to hold the bid. And this is what I've been saying for a while, that I do believe we do have a bit of upside moves coming in the US dollar, even though we've sort of been waiting on it. Existing home sales, not really of any interest in that. A couple of speakers through the middle of the night. Now, these are kind of interesting with the speakers at the moment because you're getting some people coming out. I can't remember who it was, coming out on Friday, sort of saying that they should be right to cut rates in July. Um, Given what Powell said, I don't think that's going to be the case. Um, I had a look at oil before, and oil's looking at sort of, I think it was up 10% or something. Yeah, up. I think it peaked out just in mid 81s. Excuse me, for the weekend markets, which of course things can sort of change as they come into it. But end of the day, you're getting, between 80 and 84. You've got some pretty heavy sort of resistance levels with oil. If this thing sort of continues to push up here, I was actually asking this guy from IG or something the other day about his sort of thoughts, and he said, look, if it does push up, it'll be transitory. So obviously, sort of not a persistent sort of issue or worry, and that the Fed probably wouldn't really take too much of a regard of it. I I understand the viewpoint. I don't know if I entirely agree with it because I mean, obviously, we don't know how long this is going to last for. We don't know how high oil's going to go. So yes, it's not sort of like okay, a complete dynamic shift, but I think that is definitely got to weigh into things. And I think if we see oil sort of spike, I mean, look, it was looking at like 81. If it goes up towards 100, like I've heard sort of calls at 100, 120. So I mean, somebody even said 200, but I think that's a bit stupid. But the point is that if we see oil and they're sort of pushing up, that's going to add to inflationary pressures, and that was the big thing that Powell was talking about the other day in the press conference after the FOMC. Was that's his concern? His concern is to sort of that inflation may sort of peak back up, and I know Trump's attitude to it is like, oh look, cut rates, cut rates, cut rates, and hey look, if the inflation goes up, well you just raise rates back up. Maybe, but I don't think that's the way that Powell's going to approach it. I think he's going to err on the side of caution. And I don't think that's really going to sort of be anything that's going to particularly sort of add to any sort of basis for earlier cuts, so cuts in July. So it'll be interesting to see how these sort of speakers come out, what they've got to say with it all. I think they're kind of split on the attitude towards it all. I don't think everybody's in that camp of hey, let's cut on July, but all it takes with these Fed speakers, and there's so many of these Fed speakers that come out, it's a little comment here, a little comment there, and the market will boop, go down, boom, move up, like this kind of thing. So the market does react to these things, but this is half the game with it. You know what I mean? Like these are headlines. They're not, they're just talking points. They're not actual landscape changing bits of information. It's not like they have cut the rates. No, it's them talking. And the market will react to these things, but they won't hold those moves generally. Not in my opinion. I just don't think sort of like, hey, we may cut in things and you'll see the market will sort of dip down and they'll go, oh, okay, and we saw a quick little sell off in US dollar, but then the market recovers that move and that. So as long as you're understanding of the difference between the sort of the idea that it's actually a landscape changing bit of data, like, your CPIs, your NFPs, these are the things that can impact the market a lot stronger. But a couple of headlines, it will react, but then they generally buy the dips kind of situations or sell the rip kind of things, and they'll revert back to where it was. Moving forward through that, we've got CPI out of, I thought we had CPI out of Japan the other day. I was listening to somebody and they were saying it was Tokyo CPI. No, Bank of Japan. No, it is so the whole sort of thing, like as in they had a separate sort of one just for Tokyo or so. I'm sure, did we have this last week? Yeah, CPI here. So we did. Yeah, on Friday. National Core CPI. Odd. Anyway, okay, so yeah, so I guess we're having it again. Um, oh, hold on, mate. That was year on year. What was this one? I've lost it now. That's year on year as well. Sorry, I know this is riveting stuff as I sort of try to work out what the hell's going on. So it's further for opposed to this is also marked as low impact. It's on BOJ core CPI. Okay, I'll have to look in that. Maybe I'll do it after the video. It's not the most exciting sort of stuff. But anyway, we've got this sort of coming out there as well. I guess it's something to sort of factor into. As you saw with the last print, it was a slight tick up. Um, it's at an acceptable level if this were to sort of come through here. Generally, 2% is the sort of like accepted target across the board. But ever since sort of COVID and things spiked right up to like 8 to 9% and these kind of things, 2 to 3% seems to be the acceptable sort of band, while 2% is obviously still the target. Moving along, we've got CPI. Actually, that's about it through Asia there. We've got the talkers. Yeah, CPI from Canada. How are they doing with it all? All these people always change it up so much, so they're looking like a bit of a tick up over there as well. No sort of expectations for the cores or trimmed or anything like this. But month on month, they're looking to see a little bit of a jump there. So that could be something that could impact the CAD. I think a CAD as well. It's going to be interesting how this one moves because obviously CAD moves very strongly with oil, and if oil's breaking up, but the US dollar is also breaking up. Interesting to see which one sort of wins out there. Probably say oil, but again, we'll see how that goes. Moving forward, nothing really. A couple more speakers. Powell talking. I was on Wednesday morning, so pretty quiet on the news front to sort of start the week off. We've got CPI out of Australia as well here, 2.4% expected. So the idea with the RBA in that at the moment is that basically you're just talking cuts towards the end of the year, which is why I've sort of found it very sort of perplexing that Aussie has stayed so strong. Obviously, mainly against the US dollar, but against the other currencies as well. When all they're talking about is cuts with it all, and the local data isn't anything spectacular. The only thing I could think of is because the equities are kind of sort of moving up, and people have that kind of risk on attitude. I suppose the commodities have been quite strong as well. So, okay, maybe there is a bit of reason to it there. But to the point with CPI here, 2.4% expected. Look, it's one of those sort of things at the moment. They are talking cuts. So if we see a sort of drop down here, that's going to strengthen the argument for the cuts. Inflation's not an issue. Let's cut, let's stimulate, let's get those sort of other bits of data up, and vice versa for this as well. So if we do see inflation tick up, which as you can see, it's kind of been coming down, down, down. So 2.6 we expected anyway, 2.5, 2.4, 2.3. So a slight tick up last month, just one tick there, and it looks to have stabilized. So it seems to be a bit of a band here, 2.4, 2.4, 2.5, 2.3. So that's kind of the area. Actually, it's been 2.4. Actually, now that I actually sort of look at this, ignore the forecast, it's been 2.4 since March. Previous, actual, and expected, so 2.4. So it seems to have stabilized a little bit with it. So I'd say, look, if it does come in even, I would say they would probably still say, hey, look, the fact is it's not going up, and they'll take that as a positive. And I think even if it comes in as expected, I think that could be something that they sort of go, well, hold on, wait, at least it's stabilized, it's not going up. Let's cut and see what happens. Um, then you got Powell talking again. So he's speaking a couple of times through here. So not a great deal on the data front here. Then, of course, coming into the end of the week, we'll get a little bit more. We've got GDP out of the US, a little bit weak here and expected to be about stabilized. Unemployment claims, still, it's kind of like ticked up. It was in those sort of 20s band for a bit. quite a while it was in that 20s band. It moved up to the 40s, and now it seems to have stabilized in the 40s. I did see a couple of calls of like, oh, you're above 250, another one above 280. That's times for concerns. And I think that's something that you've got to pay attention to as well, because obviously, sort of like, the US wants strong data to justify them holding the rates. If they start to see unemployment claims shooting up plus weak data, well, they need to act about something. And this is the balancing act, and this is what Powell goes on about with his sort of dual mandate, is that you're trying to balance inflation, but you're also trying to keep your unemployment and employment slash unemployment numbers under control as well. So I think it's going to be very vital with the US data moving forward as to sort of what direction they're going to be sort of taking with it all. But yeah, I think it's like anything with these at the moment. It's going to be very touchy to it, but weak data in the last sort of month or two, probably 3 months actually, the market has been punishing US dollar on any small miss. So they need to produce some good numbers. And the expectations here flat but negative on GDP, uh, pretty much flat on unemployment claims, but creeping a little bit. We've got durable goods down, so that's not good. We've got durable goods orders, uh, a bit of a jump up there, which is, what we're seeing a couple of these things inverse with the two numbers there, and then final GDP at 3.7%. So stabilizing through there. So I think this will be probably the first bit of, yeah, you got Aussie CPI, but this will be the first big bit of data that I think will be sort of on the radar sort of through the week. So that's Thursday in US session. And moving along through this, we've got pending home sales. So we've got anything more speakers, blah, 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 blah. And then you've got core PCE at the end of the month. And core PCE is basically, you could say, look, in simple terms, it's pretty much the same as CPI in that, but this is what the Fed say they use more as the indicator. So CPI seems to be the more headline market reaction-y kind of bit of data. But from what the Fed say, from what Powell and the Fed sort of say they sort of pay more attention to is core PCE. So we can see here. So change of goods and prices purchased by consuming. So as I said, it's basically the same as a CPI. Yeah, difference in CPI there only measures goods and services targeted towards and consumed by individuals. So yeah, this is it's going to be sort of something to finish the week off 10:30 on the Friday, which is always nice of them to do. So yeah, look, all in all, pretty quiet on the news front for the start of the week, and then a couple of larger bits in that sort of moving forward. But it doesn't really matter because this is going to be a Monday, Tuesday, when possible, who knows, maybe the whole week, but certainly Monday, Tuesday is going to be dominated by this Middle East situation, and we're going to see some big moves on these. So you have the weekend rates sort of with the markets, and with these sort of things, we've got gold gapping 40, $50, so about 1.5%. You got actually, I'll see if I can find these. One sec. All right, it's that movie magic there. All right, so these are as of what time are we at now? 3:30 on the Sunday. What we're potentially looking at for open. Now, these can change a lot, obviously, sort of between now and open, but you saw this one, like I woke up this morning. This is actually pulled right back here. This is now looking around sort of, 77, 78. This is up around 81, which was a 10% move. It's still a big move. We're still looking this as sort of move a gap oil to gap up $4 at this point. So weekend rates generally are kind of like these kind of numbers here at best, like 0.02, 0.03, these kind of pretty much nothingness kind of numbers. So once we start to sort of see these things, particularly gold and oil, obviously going to be the big movers. We've got $43 gap at this stage. We've got a $4 gap, $4 gap at on oil at this stage. We're going to see some pretty heavy hits. We're going to almost 1% on the equity markets. So this is pretty much in line with what you'd expect. I mean, look, Nasl's going to sort of take a bigger hit than the rest, and that down 1%. But you got 1% on the DAX. You got close to 4/5 of a percent on Wall Street. So that's pretty much as expected with it. The US dollar sort of pairs crosses here, down 1/3 of a percent. So still something significant and a lot higher than you would typically see on these sort of weekend things. And so, as I said, I woke up this morning as I sort of thought, I'll just have a look at this, and um, yeah, it was up. I think I can't remember what it was. Probably around this 5 or 6 or 7% or something like this at the time. I'm like, oh, okay, something's happened because even yesterday it was sitting at about 1.5%, which is a bit, obviously still a bit better, it's not massive. But then you wake up and you look at this and bang, and then of course I sort of see a bunch of messages like Iran's just been bombed by the US, and pretty much as expected with it all. So we'll see how these ones sort of level out. These can obviously change between now and open, but it does give you a bit of a sort of indicator of what to expect. And obviously, equity markets down, gold, oil up. Probably going to see US, well, we are seeing US dollar strength, as you can see with these two here. Not massive, massive, but still, they're something, a third of a percent at this point for a gap on open is still kind of significant. 50 points or something on those ones there. So we are expecting probably to see a little bit of a push up and a gap up on US dollar and open, as I said, gold and oil as well. So it's why it sort of sometimes makes these things a little bit irrelevant. But if we do look at this, so this is the chart that obviously I've sort of been trading with. I've been putting this one on daily, and these were the courses of action here. So this, like as I said, I do price levels, not time, but this thing's almost like bang on perfect. I have to admit. So this was the price target we were looking for here. So just to unpack it a little bit of where we were at, we had this big double bottom setting up. So you had a little flag coming up this inside here. The little flag got you to breakout of being the double bottom here. If we jump onto the 4 hour, as you can see, double bottom through here, this little flag broke out, and that actually goes to breakout here. Now, when I did this, I was like, look, I'll do two price targets based off this double bottom move here. Because what I've found more recently is if you pretty much disregard the wicks, at least at the top of these moves, like sort of in double bottom here, disregard the wicks there, these kind of things, and take that as your measured move, which is basically, as you can see, is actually, how do I, would have been the smaller one here. So that one, I guess, is about that. Yeah, that's a bit more on the money. So as you can see, if you get rid of the wicks at the top here, get rid of the wicks at the bottom, and just go body fill candles for this double bottom move, that actually pretty much came in exactly where we saw the market sort of sell down from, actually. And if you really want to be on the money, you'd put that on top of the body candle there. You'd measure this one across, this red line here. There's your measured move. Market took it out perfectly and sold it back down. So I had my price target set up at just at 99.20. That's what I was looking for. Got within 5 points. I mean, come on. It's happened a couple of times with this. I've got very super close with these things, but I haven't just missed it kind of thing. So I think it's better for these things. Obviously, as you can see, you do the err on the side of caution with this one and have the sort of smaller price target, and you hit your money. You pretty much smack bang right on, and then the market sells back down. So anyway, look, we had the double bottom, that's played out. And this is the point of sort of going through a number of different time frames. Because if we go way back here, if we go down onto, these little moves down here on the 30-minute, had this little channel, okay, that's fine. We got the breakout of the channel into a flag. The flag broke out, but the flag broke out and then gave us a break of the double bottom, which was on the 4 hour. Retest the top side of that held. Move back on, double bottom completion. Now we're moving down. You see how we go from like sort of a 30-minute time frame, and we can move all the way up to 4 hour, because this is where we were saying double bottom. There's your price target, comes back here. Now the next move here was the back test of this large falling resistance, and this is the significant thing that I think it really sort of holds weight here. This, if we, I'll put it on the daily so we can see it a bit easier. Where are we here? This big blue line, as you can see, the market, going way back to where we first started to sell down in February, has hit this 1, 2, 3, 4 times. So the more times it makes contact and you see a reaction, and quite strong reactions from that line, I mean, look at how far this one sold down. Excuse me, this one again and again. And so you can tell that the market is paying attention to this line here. So as we got the breakout, the way that the breakouts work with these falling resistance, of course, not everything's always as so perfect, but is, so get back onto the 4 hour here so you can see a bit clearer, a back test of the top side of that falling resistance. So hit it again, like I saw all these other times, sold down. This time it's only a small sell down, bang, broke up and broke out. backtest, top side of that falling resistance in confluence with this horizontal, also the 38% of this move from the lows. And just to sort of recap these things again, this move here, 38%. If you look at that as an individual move, this move here, 38%. This move, the bigger one now, 38%. So we know 38% is a strong continuation line, and we've seen it 1, 2, 3 times here. I was saying the other day that, I was feeling like this was a kind of your top of this move here, like 1, 2, 3, 4, 5. Now you're in your corrective A, B, C, whatever over here. We're going to see a gap up here. Okay, so that's where we are sort of caught up. What we want to look for now is 99.4. That's the breakout line, in my opinion, because although we've got this little area here, and you can say the body fills, and you can see the sellers who are selling it down didn't allow it to close up here, it does have a couple of little spikes up to the top. So what we want to do is really sort of clear those out. Disregard this thing here. Well, I'm disregarding. You do what you want. But this little section over here. So 99.4. What I kind of believe. I mean, look, you could say above this 99.15, or call it 99.2 still, because there's the 3 parts to your breakout. There's your breakout, your back test, and then this is the 3rd part. I cover this like every day pretty much. And this is the one that's important, because this is the one that's either going to give you a double top, in which case, they're your kind of options. If it fails to break through, well, then you're going back to target this level, potentially go down lower, or potentially sort of make a range. Or you have your 3rd move here, and this move breaks these highs here and starts to cycle again here, in which then you have your breakout, you come back, you find resistance. Your resistance will be, your support will be a previous level of resistance. Cycle starts again, you come up, you tackle those highs. Do you go through, you break through, and on you go. And that's what's going to give us a much higher sort of breakout. And as I keep sort of saying, you start with the smaller time frame, the smaller moves down here, you're potentially then breaking up and breaking the more significant levels, which can have obviously larger impacts and more longer lasting impacts. But we've got to sort of know where that level is, because this is the thing. Everyone's been selling the US dollar down. They love it. It's been the trade of the year, apart from gold long, is to sell the US dollar. There's a lot of the market that are sort of calling for the mid 90s, low 90s, and look, it could definitely potentially get there. But while you've got this conflict and everything going on, while you've got a lot of the market very positioned short, that opens the door to a pain trade, a squeeze, where the market will just actually make these people hurt a little bit, because not everybody's short from the same level, of course, but if you've got sort of short down here, well, where's your stop going to be? Your stops are going to be above these highs over here, which is going to feed this to move up a little bit higher. Getting back up above this sort of, say, 100, 150, around this sort of 101 level. If you're sort of short from here, you might be able to take a little bit of pain, because you believe that the market is going to come up and swing and then go down to the 90s. And look, it probably will. You probably will see sort of mid 90s at some stage through this year. But the thing is, do you want to sort of hold on to that position as it comes all the way up here, and in the faint hope that then it's going to act like this? Or do you want to sort of go, okay, well, maybe, okay, I timed this last bit wrong. Let's lock in our profits, and then let's maybe have it when it gets up to 103, then we can start shorting it again there. So I think there's definitely a case for sort of a move up with the US dollar. We're seeing that as a little bit of strength, given sort of what's happening with the sort of Middle East situation. But then if you add on potentially some stronger economic data, the idea that they're not going to be cutting rates, you place these things all together. And then all of a sudden, you've got a thing where people are going, hold on, wait, US dollar is drastically undervalued here. Maybe it's not about to be, maybe compared to the others, it's not actually so bad. We'll see. But, that's the kind of building of the narrative you got to sort of look out for. And that's the thing, sort of whether this stuff's true or not, it's what the market will be sort of putting out there. And this is what people will react to. And that's what we're trying to trade. That's what we're trying to capture. So that's the sort of fundamental side of it. And not to mention that potentially still this could turn out to be a massive double bottom. I mean, that's a long way to go. But of course, remember, the measured move of that is 106. We've seen that moves revert back up to 61% a number of times. So these things are sort of, they are in like probably pretty crazy, but not impossible. That's the thing. These, when people sort of think, oh, so like, nah, could never go there. Well, that's when it does. And particularly with US dollar, I've covered this a number of times. If we look at previous times that the US dollar has had these big runs, these kind of things like this, falling down, and goes back up here. This kind of move through here was a nightmare. Look at the pullbacks of these moves. Whoops. Move here. Came back 50%. Looks like it's coming down. Bang, goes back up. Next move here. Look at this one. Well, I suppose it was 38%, 50% move back there. But the point is, if you look at the sort of the price action of these things, you got to remember, like, none of this exists at this point here. It's been sold down, sold down, sold down, sold down. Looks like it's just coming up a little bit. And then it's going to roll down there. And then sort of people think, oh, look, these highs here, reaches these highs here. It's definitely going to sell down now. Took out, made a whole new low here, and it just kept on going. And this is the fanboy trade, which I've dubbed it, which is the kind of thing where they will buy US dollar, they don't care what. Smash down, let's buy it. Smash down, let's buy it more. Coming right down, took out the lows, that's great. You know what we do? Let's buy it. And they buy it and they buy it and they buy it. And this squeezes and it moves on. And look, as you can see, like this carried on for, I'll find my little timing thing. This move here, if you go just up to here, went up 7% and lasted 2 months. If we were to sort of move back up, equivalent of where we are now, where are we now actually? They're down here, so 7%. I mean, there's 7% from where we are right now. Take it from the lows. There's 7%. So these things can happen. You know what I mean? Like, it's not like, oh my God, I've never seen this before. If you look at how much this thing was selling down, look at this. How much it's selling down, big, massive low down here. And then it sort of ripped. Where's the move actually? So here. So here's the move here from the lows up here. Took out all these major highs while people would have been like, can't go past this high, can't go past this high, can't go past this high. Moved all the way back up here, nearly 8% from the low to high, 7.8%, which lines you up, 7.8 is about there, close to the 61% mark, which I actually find quite interesting. But the point is, it's sort of like, not everything repeats exactly the same, but these things are possible. And that's what you've got to keep in the back of your mind, that while everyone will be starting to pile on this thing because, they've been told or they've seen the headlines that the US is stuffed and, it's going to 90 and all this kind of stuff, that's when they'll try to short it. That'll feed the next leg. They'll short it. That'll feed the next leg. And this thing could carry on. And, if it carries on, what is it now? The 22nd of June. Well, maybe that sort of carries on through the bulk part of the summer, well, US summer, European summer, the true summer. So look, it's just something to keep in the back of the mind. The fact that we've broken this massive trend line, got the back test, that the job isn't done yet, but this is your first swing high, and this is why 99.4 is an important level. Because if you get past that swing high, all of a sudden now, you're starting a new trend in this direction. And as I've seen a number of times, this thing it's very hard to turn around. At the top of a trend, this thing took, 2 months to turn around properly. It's not going to necessarily come over here and just fizzle out and come down here. So that's why I'm sort of like keeping that in the back of my mind. But anyway, again, look, that's a bigger picture with it all. With the US dollar, 99.4, I think is going to be a very crucial level, which will give us a high through here, and potentially move on. And next sort of targets, we can work on those ones, say 100 or 101, these kind of things. They'll provide pushbacks along the way. It's not going to be straight up, but I'd be reluctant sort of being too quick to be the first person to short into it. That's my point. That I think that trade's kind of done for now. All right, let's move on. We got Aussie, and this is the thing with Aussie, as I said, we sort of saw the cracks start to show over here. So as you can see, it's been a very big grind up, and this is, I mean, disregard this kind of stupid price action move where the whole market got obliterated. But just this point through here, it's been grinding, grinding. As you can see, the buyers are moving up, the buyers are moving up, the buyers are moving up. All of a sudden, they start to pick up their sort of speed here, and they start, as you can see, it's going straight up here. This was the first indicator. I put this out the other day because this is the first time that we actually saw the buyers actually relinquish. Because if you look at all these levels of support, not one of them is a back down here. Still higher lows each time. But we came into that big resistance. We had the sort of, where is it, the other one I was trading? This big sort of wedge set up. We just completed our 7th week. Look at this on a weekly. That's 7 weeks getting above 65, but unable to close above it. It's overbought, projecting off the 61%, which is up here. Now on top of that, we're going to have some US dollar strength. We're going to see some risk off attitude. So those sort of things all combined, risk off attitude, US dollar strength, from the technical side points here, this thing's not sort of unable. 7 weeks, that's a long time. It's nearly 2 months, but it's been bashing its head every week above 65, unable to close above there. So let's get back onto the smaller one there. So I do think we're going to see a bit more of a continued downside here. And this was the early indicator. As the first time they let it up, still pushed up to top, let it down, still push up top. And this is what made it so infuriating because you're like, come on, it's got to be coming down here. And into the end of the week, they just bucketed down. So interesting sort of thing, particularly with gold and Aussie as well. I can't remember what we did at the end of last week with Aussie, where it was Friday. Yeah, so Friday last week, where was the close? Here. So you can see this is the candle coming into close last week. They sold it down. This is the candle coming into close this week. They sold it down. Now, typically, I don't sort of take too much regard of the last candle of the week because not too many people are at their desks. But same sort of thing happened with gold, and because Aussie is very prone to impact from risk things, so obviously with the war and that kind of stuff happening at the moment, the market has covered themselves just in case. And last week we saw gold gap up on open because obviously we had the initial attacks on the Friday. People bought gold up into close, and then nothing happened over the weekend, and gold sold down, most of the week. Same thing we can see here with Aussie, wherever it was there. I think it was this candle here. They sold down Aussie into, not a massive sell down, but they did sell it down into close. They're kind of covering themselves a little bit just in case something happens. Nothing happened. Monday morning, bang, they bought it up, took out a fresh new high. This week, coming into close, they sold it down. But the difference being this week is that they did actually, something has happened. So these people covered themselves. So I imagine it's going to obviously gap down on open. And you may sort of break some levels here. As to whether we got stops to be hit around here, I don't know. We'll have to wait and see. I think this is still the juicy stop area, and this is where I think they'll be targeting. So I think we'll be targeting under here. I think that'll get a big stop city hit, and I think we'll go down to mid 62s at least. I think sort of like the idea that now we're sort of seeing the sentiment change, say US dollar run. Look, if US dollar runs like I just said it would, I may actually get my buys down here because I'd like to be long from these low 60s for the second half of the year. I think there's a good chance to sort of wipe out a lot of people before you sort of do it up, sort of push back up. But point is that sort of that's longer picture kind of thing. I think that sort of like potentially we will see a gap down on open. As to how big, we'll see how it goes. I think the market's going to run it down. I think we're going to have a continued sort of fairly bearish week. I think the first big target is going to be this target over here. Now, I'm not necessarily going to be hitting it on Monday. That's fine. But the thing is, I think that's where they're going to keep driving this part of the market too. Because you got to think, there's a lot of people that have sort of been, moving up. Well, you can take these stops out, all the things. I think this will be your last line. And if that's the last line, inverted commas, air quote things, last line, there's a lot of people that are going to go, oh, no, it'll come down here. I'll hold on to Aussie because it's going to do this and then move back up. So I think regardless of that, I think this is kind of where you would call your textbook stop area. I think this is the area underneath 63.20. I think there'd be a juicy lot of stops down here where I've got this stop line here. And I think they're going to target to take those out, even if they are going to go up to mid 60s, so high 60s through the second half of the year. I think they'd want to ripple these people out first, then move it back up there. So I think I'm not going to be sort of, I've still got my shorts on Aussie. I'm not going to be quick to sort of bank them. I mean, I've held through a whole bunch of back and forth over here. I don't want to bank the first day that things actually fall apart, but I could be eating my words, and it is a very frustrating trade. Hence why I trade a couple of different accounts, different strategies. But this one is the one that I'm sort of looking at the moment. So look, I do think we have some downside coming with Aussie. As to how big the gap open is, look, we may see some buying efforts down around the 64 area. That's the next sort of logical step, and then moving down and up and up. Sorry, down and up. What am I talking about? Each step down kind of thing. So we'll see how the market sort of reacts to it all. But I would say the time to buy the dip on the Aussie might have passed now. And that's okay because I think that'll feed the move down as well because people will be trying to buy the swing. They'll put their stops under the low. They'll move it up for a second and then they'll crush it back down through it. They'll take out the stops and the cycle will repeat. And I think we'll see buyers start to move back like this. And this is what I'm looking for, this move up here. I think it'll come back down over here, maybe take out the stops down here, and then we see a move back up over there. But, I mean, there's a lot to get through before we get to this point over here. But I wouldn't want to be long Aussie at this point, put it that way. All right, let's go along. We've got gold. If the market will change. Yep. All right, so gold. So I put out a standalone sort of video on gold last week because we were at this point here. If we jump onto the weekly time frame, which is obviously a bit larger than I normally trade. Was this one here? Maybe on the daily I had it. No, that's the problem, having so many charts. Is this one here? Yes. No. This one here. Yep, this is the one. So this is what I sort of put out, and this was the plausible idea that maybe we were going to be coming back down to this target over here. Doesn't look like the case at the moment. Looks like we're going to be opening up probably around sort of that 3,400. So last time I checked, it was what was it? Actually, I haven't pulled it up before. Here. So we had gold indicatively opening at 34.12 kind of thing because it's bid and sell, so split the difference there. 34.12. So if we look at that here at the moment, that's way, way, way up here. 34, 16, 12, more or less, up here. So look, it's a bit of a gap up. Let's just see what they do with it. Look, last week, they were selling into it based off the fact that obviously we didn't get that continued move. Let's go back to the other chart we use for the dailies. So we did actually get this technical break to come down here. Negative divergence, wedge, all this kind of juicy stuff. But let's mark this one here. So at the moment, look, as I said, things will change between now and tomorrow morning. But that's where it's looking to gap up. So is this going to be an area where they go, okay, in this particular move here, here's a lower high, and they use this. Oh, great, another chance to sell it in the mid 34s. That'll be a tell. If they sort of sell into this thing, even once they've dropped the bombs, that's the tell that it's going lower. It doesn't mean it's going to happen. Obviously, a big gap up. But if you look at what we had last Monday, where was it here? So this is the close here at 30. Is that where we closed? So pretty high close, good close. And then it opened up at 51. So it gapped up $20 last week, but obviously off no actual war sort of developments. I'm just trying to think how the best to say it. No actual action by the US, call it that. They sort of go, okay, look, we covered our bets. Look at this. They bought it up into the Friday. Nothing happened. They sold down into it. Dribble, 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 and dribble, dribble. It kind of like broke down a little bit, but kind of just kept dribbling down there a little bit. So, we can see what they do when there is no escalation. Now we've had the escalation, okay, gaps up. I mean, it gapped up here just in the case that might happen. I covered this before, so saying, that's what they did. They same with the Aussie. They sold the Aussie into the close, and then nothing happened, and they bought the Aussie. This one here, they had nothing happened. They bought it up into the close. Nothing happened. They sold into it. Now we're looking to open up about here. It's going to open a big gap, so that gap will be something you can definitely trade off. But what we could potentially see, in my opinion, would be gap up here, maybe a run up here, and this will be the tell. If we see something like this, and then they go down to close here, okay, close the gap. If they move it up and then sort of come back down through here, then you know that they're selling it when there's no escalation. Gaps up, that's fine. You could expect that as a sort of thing. I mean, that's what people traditionally say. They say gold is the place to be when war's breaking out. But it didn't matter all through last week when there was more tit for tat bombings by Israel and all this kind of stuff, and they were still bombing each other. Like Iran was shooting bombs and Israel was shooting bombs, and they kept selling into it. Maybe somebody was buying into it. Of course, both of these things were happening, but it obviously did succumb to the downside. If now the US gets involved, this is what I'm looking for, is to sort of see, is the market using this? Because this is the perfect thing. If they want to run gold to 36 or 3,700, this is the time. The tariffs are still there. Now you've got war, but US involvement war. Is this going to be the time that they take it up to the top? This is the make or break time for gold, in my opinion. We're going to see a gap up. We're going to see a run on open. There's always a little bit of, I mean, this opened, I guess, hold on, wait, no, it must have opened here and sold back down. It depends. It's different feeds. This is some TBC thing or whatever. But the point is, that's just 2 seconds of price action, whatever, a couple of minutes of price action. We're looking for the actual proper move. If they, even once US has been involved with this, and the threat of further retaliation from Iran, because of course Iran's coming out sort of saying, oh, we're going to target all the US things. I mean, look, talk is talk. Let's see them actually do it. It's kind of like, well, as I said at the very start, I'm not an expert, nor do I claim to or try to be an expert with it all. But from what I've sort of seen, it's like they've got the regime there. The regime needs to progress further with these um, uh, developments of the nuclear program, because they're not that favourable by the local people. And so if they're basically sort of going, oh well, whatever, we're going to attack them back. They obviously don't care so much, probably, but it's a regime where they're sort of, again, I'm not a thing, so I could have this interpret this incorrectly, but they don't seem to sort of really factor in the sort of general population with it all. So they knew what was going to happen by ignoring any of the sort of discussions to pull back on the nuclear program. They said they knew what would happen if they said, "Nah, look, we're not going to talk to you. We're not going to listen to what you've got to say." So they were well prepared for these people to be bombed. There's the idea that they're going to attack back is probably pretty high, because they don't give a shit. I mean, they're not sort of there, oh my God, they're going to hurt the civilians. They don't give a shit by all accounts. So they are going to attack back. Anyway, look, I'm getting sidetracked. The point is they're going to attack back. That's going to add to this whole sort of, wars breaking out. It's not going to end quickly. It's going to be escalating. It's going to keep on going for a while. God forbid anybody else gets involved, yada, yada. If the market, back to what is important to us, we want to see what the market does with that. Does the market go, that's great. It's another excuse or narrative change for reason for us to be able to sell 34 plus. So if they sell down into this thing, given the latest sort of developments of everything, I think that confirms our move down to, 31, 30,000. Doesn't mean it's going to happen. Look, I don't know, a crystal ball, but this thing could open up and this could be big, the run up over here. Because if we go back to our weekly chart, I'm going to mark these things better, make it a bit quicker. It was, oh no, this hasn't, did this the other day, it didn't quite update because looks like it didn't get back down into the range, but it did. So if we upload this one, oops, no. No, there's for some reason there's an updating, because obviously we didn't. We got back down to about here, about sort of 33.40. So anyway, the point is that sort of like it popped down in here, but it did close outside what we were calling the range. So it's in a two-pronged position. The RSI is there to support it should it want to flip and run up higher. This is a range, break, back test. You go past these highs here, that's your sort of confirmation that we're probably going a bit higher, in my opinion, going above the highs that we made on the start of last week, which we're going to be pretty close to. As I said, at the moment, we're looking to open, say, around 3,400, 3,410. So should this thing break through these highs, what you've then got is the same sort of thing that I always harp on about with this stuff, is your three moves. You've got your move, your breakout, your back test. Back test is the support of where the resistance was, which it pretty much came to. Now we're in this leg. This is going to be the all-important leg. Is this one going to give us a lower high, in which case, as I said, that'll confirm that you're probably going to be going down lower? Or is this one going to take out this high here, which then you've got range, break, back test, high, high. That confirms that the cycle is going to start again. Moving up here, your targets are going to be all-time high, 3,500, and then you've got a measured move, which is 3,520. They're your initial targets. But you got to remember that this thing is incredibly, incredibly bullish. So, if the market decides to run with this, as I said, they could run it to 36, 3,700. Like, these are possibilities. It's too tough to sort of say at this point how the market's going to react with this, because I think there's arguments for both sides. The strong argument for the bull side is that it's oversold, it's tipping and about to turn up. You've got a range with a back test, and it's attempting to sort of break out and go to the top side. Argument for the downside is that, get these out of the way, is that the market used it as a excuse to sell into last week. Are they going to do that again? Because we've seen them obviously sell it down from these levels a number of times. Sell it down from here, sell it down from here, got above here, great, they sort of sold it down here. If they're unable to get past that high over there, that's then going to, in this lower time frame, give you a structural lower high. So where are we at here? So this will give you, you move up here, your back test here. This is the leg that we're kind of in. If this comes in as a lower high, as I said a second ago, that's going to be the smaller view of that structure. If you take out these lows down the bottom over here under 3380, 3380, dyslexia, 3338, call it a failed break, we'll know what it is as it comes up. If you take out these lows down here, well, then you're coming back down, you're going to be targeting the main 3280, which is then going to be a big one that's going to potentially open up to more downside. So I think that's very, very important to sort of pay close attention, particularly obviously if you're trading gold, as to how the market reacts to this big gap up. Most likely it's going to gap up, most likely it's going to run a little bit and see what they do through the rest of the session. If they continue and they take out those highs, then I think that's an open door that we're going to be going a fair bit higher as well. All right, and we've got silver. So silver, look at this big falling resistance. What's wrong? Here, rising resistance. Played its part, beautifully sold down here. We took out this 3580 kind of sort of supports, or 3590s, whichever it was over here. Market brought it back up very quickly. This big red zone here, if we go way, way back, I'm pretty sure, we can see that this was a pretty sort of strong sort of resistance. And that's the top side resistance over here. Now, this is going back to, 2011. So we're talking a 14-year resistance here. So, I'm sure there was a couple of people that were sort of thinking, surely it won't go past that. Well, it blew past that. It acted as support once. Came up to the top side here, as I just showed you a second ago. This is also 11-year resistance up over here. It's also the confluence with the top side of this rising resistance. So this is a second tap into this level over here. I'm not sure how silver's going to react to this latest development with the war. I would say probably negatively. I don't have a position on silver, but as I said, I'm interested as to what happens when it comes into contact with this rising support. This is a second tap into here, but it did put in a higher high. So potentially we could see this thing just range through this area over here. But I think you could safely sort of probably put one of these around it, a little breakout box, and say this is going to give us our direction. But with this, the caveat is that if you do break out to the bottom side, there's a good chance that you're going to run into some buyers pretty quickly. So I don't think this is necessarily the first course of action we're going to see. We'll see how it sort of plays out. Maybe all the market goes to gold, and gold silver ratio sort of rips to the top side, and silver gets hammered on that. Maybe it doesn't. I don't know. I really don't know how this is going to react to it all. So it is something that I'll be sort of watching. but as I said, I'm not in the first in line to be sort of trading. I think there's better options for me out there at the moment with silver. But what happens when it comes into contact with this rising support is what I'm interested in. A break of that is going to be quite significant, I think, because this is also what we found with this smaller wedge previously in April, and that got absolutely clobbered once it did break. So I think the ramifications could be quite strong for silver should it break this wedge. And typically wedges are reversals, so it does put it more in the camp of a break to the bottom side. Flip along, we got copper. Copper bounced back here, so I actually put a chart up on, I think on the 4 hours, using on X. And this is very important with knowing your market, but this is a nice little rise of support over here, lined up pretty well to have a bit of a sort of channel actually going with it. And as you can see, a little fake up to the top, fake down to the bottom. It actually closed outside. And this is the thing I said, and I put the chart up there and I said, look, be wary of this with copper. I've traded copper a fair bit, and particularly with rising supports, this is a very common occurrence. It loves to do a proper fake out. Like, yes, this one came down here, but it managed to close back up inside what would be that channel, and obviously subsequently moved on a little bit higher. But here, it came down, it actually closed outside, then put in a new low. That's kind of like from just a standalone textbook sort of thing. You're like, well, here we go, it's rolling over, it's coming down over here. But I said, wait till it gets out of this. And as you can see, right to the cent, pretty much, it bounced back up and then right back up the top side here. So I do think this will come down to the bottom side here. I think with everything going on, I think copper's going to be more susceptible. Silver, I'm a little bit, because silver can play both hands. It can be a sort of so much a safety, sorry, a precious metal, but it can also play the industrial hand as well. So silver, I'm a little bit umming and ahhing about. Gold, obviously, we know is going to gap up a little bit. Copper, I think, will take a bit of a whack on this because it is a bit of a risk kind of associated commodity as well. I think, again, still low out of here, I think will be it. And the fact that this came back up and just got just above these highs and then sort of found some selling, I think is kind of like, oh, because the thing is, you got to think, okay, how would somebody, what's the textbook way that somebody would trade this? And by textbook, I mean sort of like, oh, I'm a trader now. Oh, this was, it said it makes a higher high. Well, it's going up and I put my stop here. Well, what they would do is they'd go, okay, look, be diligent. Wait for the close outside. So, yep, you got your close outside. Okay, now we go short. It's got a lower low, got another lower low. It's closed outside here. That's fine. Now, where do I put my stop? Well, I put my stop, I could put it just above the most recent high, or maybe I could put it up above this one over here. So I'll put the stop just above those highs because, if it makes a higher high, well, then I'm going to get, it means it's going up. So what does it do? Comes up all the way just to that very little tip and then sells down. To me, that is kind of like, well, let's burn out the early position takers, the people that sort of are probably a little bit more too novice and a little bit sort of textbook on it all. Because they've put it in, they're out of the trade now. Now we can run it down. These things very rarely sort of break and run first time. So I think I think we do have some downside coming here. This is the first sort of target, but should we break that, I think it's going to have much larger sort of ramifications, and it's going to be coming down a lot deeper in that. But first things first, I think a move towards that 470 kind of level, or 470 level. Have a look at China. China again, still failing. It is trying to sort of get back above here. It had this little sort of falling resistance, teased up here for a second, and then they sold it back down. But again, if you zoom out a little bit with this one, because you can't really trade this as an intraday, I use it more as a barometer than actually sort of trading it. You can see this, we know where the sellers are. We can see every time at the moment it gets up here, the sellers move in. So this is, again, still just the line to look for. We know that the buyers are here and here. Yeah. Yeah. Which is what obviously makes our little range. That's why we have the little breakout box. An absence of sellers here, so buyers here, we move lower. Absence of sellers here, we move higher. Very simple. Just wait for the range to break, and that'll sort of react with these things. As I said, with US dollar sort of catching a bit across the board, there's a high chance that it catches against the yuan as well, and we might actually get that breakout to the top side here, which would also go in line with Aussie getting whacked a little bit there as well, because Aussie does like a stronger yuan. And if you look at the way that we've been running, look at this move all the way down through here. This has been on a constant move to the downside. Aussie has been constantly holding up to the upside. Should this thing move back the other way, good chance you see Aussie move back the other way as well. And that's how I sort of pretty much use the yuan against the, as a barometer against these other markets. Cool. And finally, just a little look at gold silver ratio. As I said the other day, I've kind of lost a bit of interest with this at the moment. I'm kind of like I'll keep an eye on it, but it's just very choppy kind of stuff. I can't really get a great sort of read. Obviously, we got a little bit of this channel coming down here. We got a bit of support coming down underneath it. But to me, this is just going to be exactly kind of how all these arrows are going here. Choppy. It's just going to be up, down, left, right, sort of kind of thing in that. So while people sort of try to sort of, decipher what they want to do, where they want to pop their money. And I think that's going to be important as to sort of what we see, obviously, with gold coming into this week as well. Is the market going to run with it? Or is the market going to go, look, that's great, it's another chance for us to sell into it. US dollar seems like the place to be, and they move that up. US dollar could also fail. That's another thing to consider. I mean, nothing's a sure bet. But at the moment, US dollars breaking out, well, in an attempt to break out, gold is obviously going to gap up, but we've got to see how they sort of sell into it. They're the two main drivers, I think, across the market. All right, that's it from me.